Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 28th of December, 2021. This is episode number 2139. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, popping right over into the convergent trading pre-market summary sheet this morning, we see that the volume is actually more aggressive than yesterday. It's higher than yesterday in the S&Ps, and the market is generally up. We have almost hit the 4,800 mark on the S&Ps. We got the 4797 and a quarter, and the market is aggressively bullish right now. We have a mild risk on sentiment. We have pulled back. We did sell off in the last half hour or so, but all morning we established a distribution in the low end of the range, and then we popped higher right at the European Open, right around a half hour after the European Open at 2:30 a.m. Central, and pushed up and continued to push up until just now we put in a high and have pulled back across the board. So this goes for the ES, NASDAQ, and the Dow and others in the extended trading hours. So pretty quiet trading continues for the holidays. The Santa Claus rally is here and healthy. And the only news that I see that could be impactful is that the CDC, the Centers for Disease Control here in the U.S., the federal agency, has reduced the number of quarantine days from 10 to 5 for asymptomatic infected individuals. This helps mitigate some of the workforce shortage, and that people can get back to work sooner or don't have to miss as much work. See, that's all I could find. I don't know. I don't have a news event worthy of the pop that we saw at the European Open, but that's what I see. In terms of the calendar, there are no earnings. We're going to wrap up Q4 here on Friday. Earnings will start in a couple weeks, and so there are no earnings. But we did have U.S. case Schiller pricing numbers, home price numbers. Came in pretty much in line. The home price year on year came in at a positive 18.4% with a forecast of 18.7%. And all we're left with today is API crude oil stock change, which takes place at 4:30 p.m. We're seeing cryptos pull off, back off a little bit. I showed this yesterday. This is a bit of an update. We pushed into the 52,000 mark. Remember, I have the 52,900 marked as potential resistance here, the immediate potential resistance, and we're coming off, and it's likely to continue to consolidate in the middle. Cryptos have been pretty much sideways since the drop at the beginning of the month, December 4th. Cryptos took a pretty good hit, and they've been sideways since. Turning our attention to the S&P, the S&P is again in a multi-distribution profile. It's got a double distribution profile this morning, 110,000 contracts traded, and only 16% of the inventory is long. So the book is the inventory is relatively balanced coming into the session. The range is pretty good today, almost 24 points. The point of control, 47.95. The point of control really popping higher. The market's really accepting these prices higher. Still do believe that the structure is relatively weak in terms of how this auction has progressed. So let's jump on over to the review segment here and look at what it has done. Yesterday, the primary scenario really was looking for, let me change the color. Let's make it white. The primary scenario yesterday was looking for a dip down as far down as 47.15, but most likely 47.20. Notice the point of control has shifted from 47.20 to 47.95. That's quite a big shift in the overnight point of control. Pretty aggressive. And then I was looking for it to push into the 47.40, 47.50. That was scenario one. This far exceeded that. We had an open drive, very aggressive open drive, so long only yesterday. I pointed this out in the Head Trader channel in Convergent Trading yesterday. I said long only, guys. We're not going to look to get short today. We're looking for longs only, so it's really about finding zipper patterns and looking for the breakout long. I did not trade yesterday, as I mentioned. I had only had about 2.5 hours of sleep with the newborn. So this is an environment where I need to step back, check myself, and make sure I don't come in here and just throw some money away because I'm not seeing things for what they are. So no trading yesterday. But really, we had a lot of bull patterns, bull flag patterns yesterday. It was pretty much a breakout trade, and you could see that the profile is really a very serrated profile, showing active price discovery with a close at the high. We closed and settles at the high. Very, very bullish open drive, initiative behavior. We're not looking to respond back to balance. The market is not interested in lower prices at all. So the profit is in the continuation trade. And so overall, this was very bullish. So the idea here is that we close, and then in the extended trading hours, the expectation is this is likely to continue higher. And that's what it did in the overnight session. So yesterday, relatively light volume. I believe the RTH volume, let me look here. Yeah, 710 versus about 980,000. Relatively light volume. We saw Delta pick up and become positive at the open and continue to remain positive throughout the session. If you recall the session before that, prices moved higher, but the Delta was completely flat. So there's a little bit of aggression here. We could see it in the prints on the tape that there's some pretty aggressive lifting going on. This is the Santa Claus rally that everybody talks about. So that's yesterday. Looking at the overnight session, we open up, we consolidate sideways, and then as soon as the Europeans come in, we make that run for the high, and we push to 47.9725. 4,800 right above. So no surprises here. The big surprise, of course, is that we covered a whole lot of territory here very quickly. And as I said yesterday, looking at the composite, we have a pretty weak structure. And for those of you who are here yesterday, you heard me talking about the analogy of the brick wall. As a way to imagine what a strong structure for a rally is, that you build layer by layer and you make sure each layer is well mortared, and then you build on top of it so the whole wall is acting as a cohesive unit. And what we have here is a very gappy wall, and so as the pressure increases from the top, it's those voids underneath, these gaps, these runaway portions here are likely to crumble pretty quickly. So we could see ourselves pulling all the way back into the 45.50 area quite quickly from up here. We do have a strong base of balance in the longer term, in the intermediate term range, all the way going back to the end of October. To the end of October, and so we have a lot. But look at how this profile is shaped. Look at this yellow profile here, what I call the micro composite, which is just a combination. It's a volume profile of a combination of all those days within these square brackets. These are That's the extent of this profile. It's considering the tick data within those within the confines of those brackets. And if you combine all of these days together, you'll see that we do have a relatively sharp balance area with the MC point of control, which I've mentioned many times, 83 and a quarter, but it's not really a balanced profile. However, it creates a nice little base for the market to pull back to for the continuation higher. Right now, the market's opening at the low, closing at the highs you saw yesterday. Very, very bullish. It's not a good time to get short. Here's the thing with this. Most of the time, in my experience, and I've been exposed to the public, I came out of my just being confined by my prop shop here at the Board of Trade to being exposed to the public in 2008 or so. 2008, I think my first few posts were trading FOMC publicly, posting my live trades, getting long FOMC at some point in June or something of 2008, and in an effort to share what I'm seeing and what I'm doing from a volume profiling perspective, which wasn't heard of at that point, volume profiling in general. Here's the thing, having been exposed to how online traders trade for 13 years, having been seen what the risk screen looks like and how people trade as part of EdgeClear and other brokerages, I can see that a lot of times traders just are looking for like a quick, the catch here is there's a need for a quick buck. But I'm going to tell you that there's a massive edge, in my opinion, to knowing that I'm not going to get short. So if I eliminate the possibility, there are three possibilities. I'm either going to get long, or I'm going to get short, or I'm going to be flat. Those are the only three positions you can take into the market. That's it. So whether it's a spread or whatever, you're either long it, short it, or you're not in it. And if I can eliminate, if I can eliminate one of those positions, and if I see that I should not get short, and all I have to worry about is staying flat until I see an advantage to being long, then I can reduce the amount of bandwidth dramatically, reduce the amount of bandwidth and the amount of stuff that I'm watching and paying attention to in order to initiate that long in that bias. So at that point, I'm flat. So my position's flat or long. I've improved my chances of being on the right side. So to me, just seeing that it's an open auction, it opened, and that's a low print of the day, and it just shoots straight out of the prior day's range. To me, unless it fails back in and it shows that it's very weak, you should be looking long only. So looking at the screen yesterday, most of EdgeClear's traders have been around a while, it seems. So I didn't see huge disastrous losses yesterday, but I'm sure a lot of people got short yesterday because, how could it continue? What are we doing up here? This is new all-time high territory. Well, it's a new all-time high territory on on an open drive. You do not get short that. So it kind of annoys me that folks like to fight the trend by always trying to second guess or guess ahead what the market will do. The fact is, it's telling you already. It's telling you in blunt terms what it's doing. Coming into today, it's anybody's guess what we're gonna do here. So let's look at what's expected and turn on our stock zone and master levels and get into what we're expecting here today. So the levels above us are going to be very sparse because we're in new all-time high territory, and so it's really it's all about guessing where the market might turn. So I've got this big stock zone that I put in here When the market was down here last night, or actually this stock zone has been here a while, it is a multi-measured move target on a one major and two minor measured moves from prior moves. They're basically fib extensions that overlap each other, in addition to 4,800, and we pushed right into it here at 97 and a quarter. The level is around 98, and we're pulling back. So we're pulling back to yesterday's high, to mid VWAP. We have the overnight point of control above us. So what this is saying, the condition that the market is in right now, we've pushed to a major area as highlighted by this thick stock zone right here. We're pushing into a major area and we're pulling back to mid VWAP. It tells us that the open may be a little bit unclear, a little bit murky. So I'm expecting an open auction out of range. I'm looking for the market to dip into yesterday's range. It could potentially push to 47.80. This high volume node right here, 47.80, around the settlement price, and then consolidate before it starts to take out the 47.95 for the overnight point of control stat and the overnight stat at 47.97 and a quarter. And if so, I'm looking for it to push into 48.03, the next measured move high, consolidate here, and then continue to 48.15 before it stalls out. This gives us the range that we've been working with. Yesterday's range was quite wide. Actually, we pushed through the target by 40 points, but 45 points is what we're looking for here in range, and this gives us about 35 points. So there's a lot of room to play in here. So that's the primary scenario. The secondary scenario, really a complete failure to continue, which is very unlikely. It's an open auction that pushes high, takes out the weak high, pokes through the 4,800, consolidates, comes back in, falls to 80, and then starts to retest some of the singles we left behind at 47.64 and a quarter, all the way down at 57.55 before the bounce. So this becomes, this area here is 55. Before the bounce, that's scenario 2. Just be careful this morning. The open is likely to be relatively murky because of the way it played out. We're opening right at yesterday's high, a very bullish close yesterday, and we have the point of control above us. So that's going to act temporarily as resistance up at 47.95. Once it takes that out, it's likely to be free to push into 48.15 and so on and so forth. Good luck today, and I'll catch you tomorrow morning. Take care.